Ladies and gentlemen, if you own silver, this isn't the time to relax, it's the time to prepare. The data is flashing warning signals, and most investors are completely missing what's about to unfold in the precious metals market. Investors, stackers, and truth seekers, today we stand at a pivotal moment. What you're about to hear could very well define the next chapter of your financial journey. If you own silver, if you've held on to it through the noise and the skeptics, listen carefully, because the next weeks, not months, could bring a shift so monumental it will change the game entirely for precious metals. Right now, the silver market is speaking very clearly, but only if you know how to listen. Most people are distracted by headlines, by opinions, by daily price noise. That's not where the real information lives. The real message is in the market structure of the market itself, in the way price is compressing, in the way momentum is building quietly under the surface. And what I'm seeing tells me this is not a sometime later situation. This is a weeks, not months setup. When markets prepare for a major move, they don't announce it loudly. They tighten, make coil volatility contracts, ranges narrow in price, begins respecting very specific levels. Silver is doing exactly that right now. It's not random, it's not emotional, it's mathematical. The market is transitioning an indecision into decision, and that phase is always the most dangerous for unprepared investors. Over the past cycle, silver has shown a very consistent behavior before any meaningful upside acceleration. It first frustrates both sides. Bulls get impatient because price isn't exploding. Bears get confident because price isn't collapsing. And right in that moment when participation dries up and conviction fades, the market makes its move. That's the pattern repeating again. Now, what's important to understand is that these setups don't last long. Once silver breaks out of this compression zone, the move can be fast and unforgiving. You don't get time to think. You don't get clean pullback. Price can gap, spike, and rear itself before most people even realize what's happening. That's why preparation matters more than prediction. Another key signal is how silver is reacting to pressure. Every attempt to push it meaningfully lower is being absorbed. Selling pressure shows up, price dips, and then it stabilizes instead of cascading. That tells you there is underlying demand. Strong hands don't chase price upward. They absorb weakness, and that absorption phase is exactly what builds the foundation for the next leg higher. At the same time, momentum indicators are resetting without breaking structure. This is critical. Instead of overheating and collapsing, silver is working off excess energy sideways. That's bullish behavior. Weak markets fall when momentum cools. Strong markets pause, reset, and then continue. Silver is behaving like the latter. People often misunderstand urgency in markets. Urgency doesn't mean panic. It doesn't mean reckless action. It means awareness, recognizing when probabilities are shifting rapidly. The probabilities right now are shifting toward expansion, not stagnation. And expansion in silver rarely happens quietly. There's also a psychological component at play. Many investors are still anchored to past price levels. They remember frustration, they remember false breakouts. That memory keeps them cautious. Markets love exploiting memory. When enough participants are hesitant, the fuel for a sharp move increases, because when price finally proves them wrong, they rush back and amplifies the move. This is why the coming weeks matter so much. We're approaching a resolution point. Either silver breaks and accelerates, or it briefly flashes weak hands before doing the same thing. Anyway, in both scenarios, the window to prepare closes quickly. Once the move begins, risk increases, emotion increases, and decision-making quality drops. Preparation right now is not about guessing exact price targets. It's about knowing your plan before volatility expands. It's about understanding what you hold, why you hold it, and what you will do if price moves aggressively. Markets reward those who decide in advance, not those who react in real time. I've seen this pattern repeat across asset classes and cycles. The biggest gains don't come from chasing excitement. They come from a positioning during boredom. And right now, silver is boring to most people. That's precisely why it's dangerous to ignore. If you own silver, understand this clearly. The market is no longer asleep. It's stretching before sprint. The signals are there, the compression is there, the absorption is there. What comes next is movement. And when that movement starts, it won't wait for consensus. The question isn't whether silver will move. The market has already answered that. The only remaining question is whether you recognize the signals early enough to be ready when it does. When people think about silver's long-term potential, they often make the mistake of looking at it through a short-term lens. They focus on yesterday's price, last year's range, or the frustration of a cycles. But markets don't move based on memory, they move based on structure. And when you step back and look at silver from a broader perspective, the structure tells a very different story than most people realize. Silver is not behaving like a tired market at the end of a trend. It's behaving like a market that has spent years building a base. Long periods of consolidation are not signs of weakness. They are signs of accumulation. The longer the base, the more powerful the move that follows. Silver has been compressing, cycling, and digesting for a very long time. And that kind of behavior historically precedes major repricing events. What's critical here is the relationship in price. Silver hasn't needed to set GE higher to build strength. Instead, it has allowed time to do the work. Each cycle has carved out higher structural floors, even when price action looked messy on the surface. That's how strong trends are born, not with excitement, but with patience. When you analyze long-term charts, you can see silver transitioning from a corrective phase to an expansion phase. This transition doesn't happen overnight. It happens when volatility compresses across higher time frames, when momentum resets without breaking key levels, and when downside moves lose follow-through. All of those conditions are present. Now, another important factor is relative value. Silver has spent an unusually long period undervalued relative to other hard assets. These imbalances don't correct gently. Markets are not designed to drift back into balance slowly. They tend to overcorrect. That's where the real opportunity lies. When silver begins to move, it doesn't aim for fair value, it overshoots. It always has long-term upside potential. It isn't about a single catalyst, it's about alignment. Technical structure, market psychology, and macro pressure eventually line up. When that alignment occurs, silver doesn't grind higher, it accelerates. Acceleration is what catches most investors off guard because they're still anchored to the idea that silver must move slowly due to its history. But history actually shows the opposite. Silver is one of the most explosive markets. When it transitions into a TR bullish phase, it remains dormant longer than most assets, and then it moves with speed and intensity. That's why long-term projections often seem unrealistic to those who haven't studied previous cycles. They underestimate how quickly sentiment can shift once price confirms direction. What also matters is participation. For a long time, silver has been ignored by mainstream capital. That absence of participation is not a weakness, it's potential energy. Trends don't end when everyone is out, they end when everyone is in. Silver is nowhere near that point. There is still skepticism, hesitation, disbelief. Those emotions are fuel for higher prices, not obstacles. From a longer-term perspective, the market is setting up conditions where higher highs and higher lows become the norm, not the exception. Once that transition is confirmed, silver enters a phase where pullbacks are shallow, momentum stays elevated, and trend continuation becomes dominant. That's when long-term targets that once sounded extreme begin to feel inevitable. It's also important to understand that long-term strength doesn't eliminate volatility. In fact, volatility often increases during bullish phases. Sharp pullbacks, sudden surges, and aggressive swings are part of strong markets. The difference is direction. In a bullish long-term environment, volatility works in favor of the trend, not against it. This is why positioning early matters so much. Long-term moves reward those who are patient, bring consolidation, not those who chase confirmation at higher prices. By the time everyone agrees that silver has entered a new era, much of the opportunity is already passed. The biggest mistake investors make is assuming that the future will look like the past. Silver doesn't need to repeat old ranges. Markets evolve, structures evolve, and when a market spends years preparing, the outcome is rarely modest. Long-term potential is not about hope or hype. It's about probability shaped by structure. And the structure forming beneath silver suggests that when this market finally commits to its next major trend, it will redefine what most people believe was possible. That the move won't happen because people expect it. It will happen because the groundwork has already been laid. And when silver finally steps into that role, the question won't be how high it can go. It will be how many were positioned before the rest of the world noticed what was already unfolding. Timing is the part of the market most people underestimate. And yet, it's the one element that separates consistent results from constant frustration. You can be right on direction and still lose money if your timing is wrong. That's why short-term movements matter even when you're focused on a bigger picture. Right now, silver is sending timing signals that shouldn't be ignored. Markets move in phases. They advance, they correct, they consolidate, and then they advance again. The mistake most investors make is assuming that corrections mean the trend is broken. In reality, corrections are often the mechanism that protects a trend. Silver is currently in that protective phase. It's not collapsing, it's not accelerating, it's digesting, and digestion is what allows the next move to have strength behind it. Short-term pullbacks are uncomfortable by design. They shake confidence, they force doubt, they make people question whether holding was the right decision in the first place. That emotional pressure is not accidental. It's how markets transfer assets from impatient hands to prepared ones. When you understand that timing becomes less about fear and more about probability. What we're seeing now is a controlled pullback within a much larger structure. Price isn't breaking critical support. Momentum isn't rolling over aggressively. Instead, indicators are cooling while price holds firm. That combination is important. It suggests that selling pressure is temporary, not dominant. Weak pullbacks inside strong structures are often opportunities, not warnings. Another key aspect of timing is how fast the market recovers from downside moves. In weak markets, bounces are slow and unconvincing. In strong markets, dips are bought quickly and decisively. Silver is starting to show that behavior. The moment price dips into key zones, demand steps in. That tells you the market is being watched closely by participants who are prepared, not reactive. Short-term timing is also about recognize when risk is lowest. Risk is not about price being high or low. It's about uncertainty. When silver is chopping sideways within a defined range, uncertainty is actually reduced. You know where support is. You know invalidation would occur. That's when decisions can be made with clarity. Once price breaks and volatility expands, risk increases even if the direction is favorable. This is why waiting for confirmation often costs more than it protects. By the time the breakout is obvious, the easy part of the move is already gone. Short-term timing isn't about chasing strength. It's about positioning during calm periods, when emotions are quiet and logic still works. There's also a rhythm to silver that repeats across cycles before major advances. It tends to produce one last frustrating phase, overlapping candles, false starts, minor shakeouts. This phase is designed to exhaust attention. People stop watching, they stop caring. That's usually when the market is closest to moving. Right now, silver is very close to that point. The structure suggests a resolution approaching. Either the market briefly dips to clear remaining weak positions, or it breaks higher and leaves hesitation behind. In both cases, the timing window is narrow. The longer silver stays compressed, the more violent the release tends to be. Short-term traders often focus on precision entries, but even long-term holders need to respect timing. Adding, adjusting, or even simply holding with confidence depends on understanding whether a move is corrective or destructive. What we're seeing now is corrective behavior. That distinction matters. The coming weeks are critical because this is when the market decides. Once a decision is made, price moves quickly enough that second chances disappear. Timing then shifts from opportunity to management. That's not a bad thing, but it's a different phase, and it favors those who prepared earlier. Preparation doesn't mean acting blindly. It means having clarity, knowing where support matters, knowing what would change your outlook, knowing that volatility is about to increase and that hesitation will be punished more than patience was before. Short-term timing is not about predicting the exact day or hour of a move. It's about recognizing when conditions are aligned for change. Those conditions are aligning. Now, silver has spent enough time correcting, enough time consolidating, and enough time frustrating participants. Markets don't reward comfort, they reward readiness. And right now, silver is offering a final moment of relative calm before it demands decisions under pressure. The smart move is not to react when that pressure arrives, but to understand the timing well enough that you're already positioned when it does. Risk is the one topic most preferred to avoid, yet it's the one that ultimately determines survival and success. People love talking about upside targets and potential gains, but markets don't move in straight lines, and silver is no exception. Understanding how to prepare for volatility is not optional. It's essential, especially now when the market is approaching a phase where reactions become faster and mistakes become more expensive. Preparation begins with accepting that volatility is not a threat. When you expect it, it becomes a threat only when it surprises you. Silver is entering a period where price swings are likely to expand, not contract. That means sharper moves in both directions, quicker reversals, and less time to think. If you wait until that happens to decide what to do, you've already given up your edge. One of the biggest risks investors face is emotional exposure. When price moves aggressively, emotions amplify fear during pullbacks and grief during rallies, push people into decisions they wouldn't make in calm conditions. Preparation neutralizes that when you define your strategy in advance, volatility becomes information rather than stress. Another overlooked risk is overconfidence. Strong setups can still experience temporary drawdowns. That doesn't invalidate the larger structure, but it can force poor decisions if expectations aren't realistic. Silver has a history of sharp shakeouts even during bullish phases. These moves are designed to test conviction, not to reward impatience. Preparing mentally that reality is just as important as any technical analysis. Risk management is not about eliminating losses, it's about controlling them. Knowing where your thesis fails is more powerful than knowing where profits might be. In silver, key structural levels act as decision points. If those levels hold, the broader outlook remains intact. If they fail, capital protection becomes the priority. Preparation means respecting both outcomes without emotional attachment. Another element of preparation is understanding position size. Many investors focus solely on what to buy and forget how much to allocate. Volatile markets punish oversized positions. They force you out at the worst possible time. Proper sizing allows you to stay engaged without being emotionally overwhelmed by price swing. That's critical in a market like silver, where intraday and weekly volatility can be extreme. Liquidity is also part of preparation. Fast-moving markets don't always offer ideal exits. Slippage increases, spreads widen. If you're not prepared for that, execution risk rises. This is especially relevant during breakout phases when everyone tries to act at once. Those who planned ahead aren't scrambling, they're observing. Preparation also means separating conviction from stubbornness. Conviction is based on structure and evidence. Stubbornness is based on hope. The two feel similar in calm markets, but volatility exposes the difference quickly. Being prepared means being willing to adapt if the market proves you wrong, without panic, without denial. There's a common misconception that preparation limits upside. In reality, it protects it. When you're prepared, you don't feel the urge to take profits prematurely out of fear. You allow trends to develop because you're not emotionally overloaded by risk. That's how meaningful gains are captured, not by prediction, but by discipline. As silver moves into a more active phase, the margin for error shrinks. Small mistakes become amplified, hesitation becomes costly, emotional reactions replace rational thought. That's the environment we're approaching. and it's not meant to be comfortable. The people who thrive in these conditions aren't the most optimistic, they're the most prepared. They've already decided how much risk they're willing to accept. They've already identified the scenarios that matter. They're not guessing in real time. Preparation is quiet. It doesn't feel exciting. It happens before the headlines, before the surge in interest, before volatility dominates attention. By the time preparation becomes popular, it's usually too late. Silver doesn't give many warnings before it moves aggressively. It compresses, it tests patience, and then demands action. We are very close to that moment. The opportunity is not just in price movement, it's in how well you handle it. In the end, success in silver won't come from being bold at the wrong time. It will come from being calm. When others are emotional, disciplined, when others are reactive and prepared, when others are surprised, that's not luck, that's strategy. So here's what you need to take away. Act with intention, prepare with clarity, and remain informed. Not because anyone can promise you certainty, but because in markets like these, timing and readiness are your greatest advantages. If you own silver, these coming weeks are not ordinary. They are defining when the market shifts, when the trend accelerates. You want to be in a position to benefit, not wonder what happened. Stay vigilant, stay prepared, and above all, don't let opportunity pass while you are waiting for certainty.